All right, so this is June 22nd, Monday, 2026, and this will be a market review in the eyes of ICT, Power 3, and quarterly theory. No trades were taken today, nothing that I found high probable, but we will go over it regardless. Okay, so how did I establish my bias going into the day? Um, to start my pre-market, I was bullish due to us on a higher time frame market maker buy model. Right, this is just because we're at all-time highs. We've been delivering from the smart money reversal. And then we have this fractal. So right, this is a higher time frame market maker buy model. Our fractal lower time frame market maker buy model as well. With all-time highs, they clear draw higher and previous week high as well. All right. So looking at the daily power of three, we open and immediately manipulate lower, sweeping previous day low on all assets. Okay. Following that, we have clear expansion higher. So that's our clear signature of higher prices, confirming this key level to trade away from. Right. So we always want to align ourselves trading away from low day to our higher draws and liquidity. Okay. So after that, Um, we continue to expand pre-market. But one thing I did notice is that all of these 1 hour candles lack any manipulation lower, right? And then we have these large wicks higher. So that's kind of a sign of high resistance distribution or engineering liquidity, okay? So coming into market open, I'll just start right here. Get rid of all this crap. Okay, so what do we have? This is too far. Uh, okay, market open, and what happened? I'm just messing this up. Okay, before market open, what do we have? We have end here liquidity beneath. We have previous week high as a clear draw. On other assets, we have high time frame buy side on both assets, YM and ES. These are just high time frame internal highs, right? That we're drawing towards manipulation. We're trading away from, right? So the one thing I was concerned about was this low resistance liquidity. Just because it's a clear target. There's failure swings, and it price could easily draw to it. So this 30-minute gap was a clear condition, right? If we respect this gap, then we should go higher to previous week high and higher prices. But if we disrespect it, we probably will see this LR get swept and ran through, and then manipulate lower in this lower or higher time frame, more discounted internal range liquidity. Okay. So I wanted to see, because of this, right? I want to see minimal mitigation of this 30-minute gap. Because I don't want to, if we start digging deeper down here, right? If price starts digging deeper, um, I'm going to assume that we're going to take out these failure swings before moving higher. But I wanted to see, price barely mitigate this and then move higher, showing clear expansion signatures, right? So what happens? Price opens up and immediately takes out buy side, right, on both ES or pre-market buy side on ES and YM, still leaving these DOLs intact above. And then NQ takes out buy side and sell side, right? So this is ideal if we're going to trade higher, is we have this sell side manipulation, except, YM and ES don't have that. So for me, it's not as high probable. However, we manipulate lower and form this small cracking correlation that could serve as a key point of reversal. And we have the manipulation, we have displacement we could trade away from, and we get just that is we trade higher and then fail to deliver initially to buy side, right? And then we retrace very deeply into the range, forming this another SMT here, another cracking correlation between these lows. And then from here, there's really no other reason we should manipulate lower or see lower prices if we are bullish to these highs, right? So we do get this expansion higher, and then a very solid continuation entry, which I did not take. I was just like scrambling through my tabs off on a laptop this morning. But I would say this is a very solid continuation entry. We're trading away from the SMR, aligned with a high time frame drawn liquidity. Um, we have this clean expansion higher, protected low because we're sweeping this internal low. Clear expansion. We have this L engineered failure swings on all assets leading to this high time frame DOL, right? So this is very nice. Um, however, I just didn't take this. I messed up on my laptop. Um, one thing to note is just this 930 PO3 development is really not great. We're opening higher and lower, and we're failing to distribute higher, then we're going back lower, right? So it's just obviously to tell not clear conditions so far, as well as the overnight expansion could lead to like the 400 point overnight expansion that we had could lead to poor price conditions, right? Or 500 point, right? When we have that going into market open, we might not expect or can't always expect New York to deliver just because we've expanded so much already in a day, right? Continuing on, I think this is a very good setup for me personally, and it would have been a break even, unfortunately, because we failed to deliver the previous week high. I likely would have gone break even just that high a day, especially something I noted as well. I kind of tape readed it after I failed to enter was immediately at 10 a.m. ES sweeps a high of day as well with like a rejection away. So that's another reason could go break even is because the now 10 a.m. Opens higher, manipulates this high, and rejects. It was another thing if I wasn't break even already, I would see that and go break even. All right, so we failed to deliver the previous week high, and from here it's like we have this protected swing. There's no reason we should not deliver. Um, so then it's like, all right, like what? Why is price really doing this? Um, and something like this, I would never trade away from. Like I'll never take this SMR, just because we have no really clear level we're reversing from, in my opinion, like a high probability level, as we have this high time frame buy side on all assets that we're failing or not reaching. But that doesn't mean I would like just short because these are our failure swing. This will be a nice target, ideally later in the week, right? I'm not trading away from this, but what could confirm, you know, this as a high of session, high of day is just going to be like complete expansion through all of this, right? This invalidating all of this, all these bullish PD arrays. Another thing that I noted as well as something that you can spot um, conditional wise or conditions to trade is that you want to see fair value gaps and or imbalances form, right? Because that will show you the displacement and expansion that we have towards our draw on liquidity. Okay, so you can notice here, oops, we have literally no fair value gaps form on the 5 minute time frame at all whatsoever. Okay, and that's not a clear sign. We want to see expansion. We don't want to trade consolidation. We want to trade expansion. Okay, so now we have all these slanted lows um, beneath us at sell side, and see how price begins to expand lower, right? We actually start forming expansion legs towards these low resistance liquidity pools, right? We're forming these fair value gaps, forming these imbalances, showing clear displacement. And at this point, when we're this low in the range, again, we failed to distribute to buy side 2 times. I would look to take shorts down to this LR beneath us. Okay. However, um, I found no continuation entry that was high probable. Ideally, I want to see a retracement into this expansion, form a protected high by just sweeping an internal high, and then clear expansion away, forming the CISD. Right, that's what I want to see. Not what we got. We just continue to dump lower. Um, yeah, so no trades for me today. And then at this point, right, if we're bullish high time frame, but if you're trying to trade, you know, a reversal at 11 a.m., right, it can happen. However, it's another reason I look at it, how we formed the imbalances and when we did is right. We failed to displace and reach previous week high, and now if any longs that we take are going to have to fight all of this displacement imbalances, right? So the high time frame appeal for longs is very valid. We have previous week high, high time frame buy side on all assets, right? This is even before we swept this internal low. But even when we swept it, much lower, right? It's like for any trade that I will look to take, there has to be a high time frame appeal, a high time frame draw on liquidity, as well as a low time frame appeal. So that can be in the term of engineered liquidity, right? So what would I want to see? Um, let's say in this scenario, if we're looking for longs here, right, and say we swept this internal buy side um, or some relevant swing, and maybe it's perfect. We have a 1030 like reversal type of play that could happen, right? Is when I'm trading this long right here, all of this right here is displacement in these fair value gaps that price has to fight through. And that's how I see it in my eyes. And say we actually swept this right here. So this is perfect. And I actually think I was looking for this long. But I'm like, all right, if I take this long, we have prices to fight through all of this displacement, right? And that's the only displacement we got in clear direction all morning. So instead, what I would want to see, right, we have this engineered high time frame DOL, high time frame appeal. But instead, I'd want to see like, these failure swings. Maybe we form on the way down as a reason for price to like almost a ramp to higher, right? It's almost a ramp to previous week high or that high time frame DOL. Um, instead of just like this clear sharp like catching a falling knife kind of thing, right? There's definitely a difference of when I would kind of fade this structure almost, and when you can validate fading or trading against this, right? But you got to have this low time from appeal, this engine liquidity failure swings, this LR built up before catching reversal, retracement, whatever it is, right? Another example is here, right? There's again, this is going over like the low time frame appeal to high time frame DOL. So we have this high time frame previous week high, but what does also have? It's almost like we have this trend line liquidity where prices clear reason in clear low time frame, low hanging fruit draws to run through like a ramp up to previous week high, right? So that's something that I note, right, as well as just the conditions that we're trading in. So we want the LR appeal to the high time from DOL. You see how this is the LR that we have, this engineered liquidity failure swings, and price expands through it. That's how I want to see what I want to see in any trade I take, not just catching a falling knife in this type of structure, right? We have low time frame appeal, high time frame DOL. That's just something to note when you could be taking trades. That's something I look for when taking trades. But yeah, I think we just sold off, and then we just ended up consolidating, failing to expand away from these internal lows, and we're also super late in session to expect some type of reversal. So yeah, let me know if you have any questions or anything. Shoot me a DM. But yeah, have a good one.